Hello, everybody. Welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Silver Elephant, a mineral exploration company with gold and silver projects in Bolivia. It's John Lee. Great to have you back on the program.
Oh, thank you for the introduction, Jesse.
Well, I want to get started with the main themes and trends you're currently watching in the silver market that you think more investors and stackers should be paying attention to. What's on your radar right now?
Yeah, Jesse, I was just on a couple of other shows last week. Silver has decisively broken out of the $35 handle. And the fashion in which the resistance was taken out from 34 to 36 in a hurry indicated to me that is something significant. And the last time silver was $50 was 1980. And the second time silver was $50 was in 2013. So that was a 33-year consolidation of that cup formation. And now we're looking at another cup formation to challenge that $35 resistance again. So assume that my thesis is correct and assumption is correct that silver is going to take out $35 before the end of June. There is a rollover of July contract on the COMEX by June. I think this coming Thursday. So there may be a bit of a last gas pressure to keep the silver in check for this coming week. Then you're looking at from 2013 to 2025. That's a 12-year. That's a 12-year enduring of pain and suffering. So the first gap was 33 years, and the second gap is 12 years. And if we were to have a breakout this time around, I think it's going to challenge $50 in a hurry. And as always does, silver doubles after it takes out the $35 handle in the prior two occasion in a month. It doubles. Then we're looking at $70 plus silver certainly will be over $50. And you got to catch this ride. If you miss it, it's going to be, so if you go, first time is 30 years, the second time is 12 years, and the next time is going to be maybe 3 to 5 years before sort of the next rally comes. So it is a very significant event we're witnessing right now in history.
So do you think this time around will mirror the previous silver all-time highs in that it spiked tremendously, but then it also collapsed on the other side? Or do you think we could have a more sustained, if silver goes to 50, 75 as you're outlining here, do you think because of, the supply deficits and perhaps monetary demand coming back into play, we'll touch on that a little bit later, but do you think those factors could create a scenario where silver goes to 50, 75 and stays there, or even goes higher for a longer period as opposed to a drop-off that occurred the last two times silver hit all-time highs?
Understood. You raised a few points. First of all, there's a couple of things to watch out for in this market right now relative to silver, and that is gold and the dollar. Usually silver follows gold's lead, and the dollar's direction also trades opposite of silver and gold. So right now, gold is giving a green light for silver to take out $35. The gold's ascent took some people by surprise, and sort of with the deers caught in headlight. There was never any correction for gold's rally from 1800 to 3300 in the last 15 months. So the silver bucks were waiting for the correction, which never came. And now it seems to me that there's a very clear rotation and physical buying for the first time into silver from gold. And it's quite clear in the last 2.5 weeks or in the last 6 weeks that typically silver investors play a little hide and seek, right? Depending on the direction of the major general, which is gold. But now I'm looking at silver taking the lead over gold. So there's been a number of occasions in the last few weeks where gold is seeing a correction, but silver was undeterred, and there was heavy buying on any technical support level. And that is a very positive sign. And if gold were to stay at the current level at around above 3,000, I think the 50-day moving average is around 2,800. And with the current geopolitical uncertainty, certainly lends additional support to gold. Then it's going to give the green light for silver bucks to step in. At a historical norm of 70 to 1 gold to silver ratio, at say a $3,200 at say $3,200 gold, you're looking at around $45 silver. So that is comforting to know. However, the dollar has collapsed since the trade war over 10%. And euro is no better shape than the dollar. In fact, I believe the euro is in a terrible shape with the lower interest rates, with the geopolitical uncertainty, with the decimation of the industrial base. And so I see the dollar's downside being limited and sort of mirroring the prior correction of the dollar. Usually 10% is sort of the range of its trading. Therefore, silver has to rise in spite of a rising dollar, which it is capable. However, there's never a 100% clear path, right, towards your target. So I would just say that occasional rally of the dollar might dampen silver's rally. However, there seems to be a very clear rotation from gold to silver, and gold's market is at least 10 times bigger than silver. So you really need a smidgen of that to spill over to silver, and it is doing that for platinum as well, despite the lack of fundamentals of the platinum. I think I came on your show, I said platinum is being beaten down so bad that it's one of the metals to watch out for, and I think it's gone up around 20 to 30%. So those are the couple of factors as to where silver is going to land after a rally. Silver is going to stage a blow off, just like it did in prior three occasions in 1980, in 2013 when it went to $50, and also in 2021 when it went from 14 to 20 in a hurry. But where it's going to rest is really anybody's guess. I think that if gold were to plateau or establish a permanent support level of 3,000, then I would not be surprised to see silver after a correction, after rally, to be sitting on that $35 level, right? So nobody really knows. It really depends on some of the geopolitics and some of the relative trading platforms of gold and the dollar and a number of other factors. One thing I want to keep in mind, though, Jesse, you and I talked already, ad infinitum, is what's driving silver is never the industrial demand. It's always the investment demand. If industrial demand dictates the price action, then oil would have never gone down to negative during the COVID era. So it's always that investment demand that drives silver much higher level. But that industrial demand is going to help establish a new support level. So what is that level? Remains to be seen. And we can briefly talk about the action of how silver is going to go up and why it's going to come down, if you like to.
Yeah, let's do that. And I do also want to give you credit on your call on platinum. You did mention that on the show. So that seemed to be pretty spot on. But yeah, give us some more insights into what you're thinking about silver's price action.
Yeah, I mean, silver in itself is a $30 billion market. It's billion ounces of silver in mine production. And then you look at industrial demand as around 2/3. And the above ground stock inventory, nobody knows, but I don't think it's more than 500 million ounces, just a billion ounce round number. So you're looking at collectively a $35 billion of above ground inventory, and additional supply on an annual basis, another $35 billion. So certainly it's a very, very small market. In itself doesn't really have any significance in the global landscape per se, given it's such a small in nature, and does have substitutes in the industrial usage. But silver, like gold, is being picked on kind of like as a proxy between fiat and real money. And that's why it's being squeezed time and again. It's almost like the liquidity in silver is being throttled and it's being bottlenecked. An example I just used recently is almost like your wife trying to pack a carry-on luggage and is being packing so much liquidity, right? Guys are trying to get in and you just try to hammer that with a zipper, and eventually that zipper is just going to blow wide open. And that is what we're looking at. A lot of the speculators don't fear getting silver because it's got a triple red, with the AK-47 by the Fed saying this is a no-go area. But nonetheless, the gold bucks continue to accumulate. So to the point where the fundamentals are undeniable and the upside is so much outweigh the downside, looking at gold to silver ratio, looking at oil price, looking at this real estate prices, just about all the different ratios, silver is completely out of whack, that eventually the dam will be broken. And that's what we're looking at right now. The zip is on the verge of totally being exploded. You're looking at a total explosion in the silver price moving forward. What is happening now is there are two types of shorts. The hedge funds are covering right now. I think their position is substantially covered from 34 to 36. And these people are profit driven. They're private entities. So they are covering the shorts because the general has retreated. And when I said the generals, they are the cartels. Now, cartels, they have a printing machine, much cited by Elon Musk. I think he found like 14. One is Department of Defense, one is Department of Treasury. They just print. So the cartels are not profit driven or profit seeking. So they can have unlimited. They can print unlimited. They have unlimited, they don't have lost stuff. However, when they see the tide is coming, they can only print so much in a given day. So they will retreat when they see a major technical support is being resistance being taken out, such as we're seeing right now. So after the hedge fund covers, what you're going to see is the industrial user used to be sidestepping, and now they're going to come in because there's silver is a strategic metal, kind of like Apple going after cobalt 5 years ago. So they're going to start buying the futures and started getting into the market to secure their stockpile for the next 6 to 9 months. So used to be that these industrial users used to be sort of a nimble and not a real player in the market. They've become a significant market participant. So they're going to be anticipating additional silver rises. They're going to start buying physicals and start hoarding. And then the third phase, the most spectacular phase is, and then also you have some of these physical buyers that continue to hoard as they have been doing. And you've been talking to a few of them. They're a bit of they're just a diesel, right? They just march step by step, regardless of the price action. But now you're going to see more and more larger speculative physical buyer investors come in, drive the price higher. We're not there yet. I believe when you get to the $40 level, that's when the big speculators come in. So they will attack both the physical market and the paper market. So from 40 on to 50 and above and beyond, you're going to see the speculators and a lot of the algo-driven investors, paper investors, hedge funds, going to pile on the long side. The top will be established in hindsight is when you have a big green handle on extraordinary volume. This is when the cartels actually were stepping along in the market to drive that FOMO people, the last drop, exhaust absolute buying. So instead of shorting the market, they're actually be longing the market from the Hong Kong Open, 9 o'clock in the morning in Hong Kong to London Open, which is be about 4 a.m., 3 a.m. in New York, and then followed by another big rally in New York, open at 9 o'clock. So what they're doing is to exhaust buying and to reduce the number of ounces that speculators buy, because as they drive at the higher prices, the less ounces you buy. So you're going to see a spectacular rise in the green with huge volume, maybe 2 to 3x of what you saw in the past. And then with the last FOMO guys come in, fear of missing out, then you're going to see equally heavy volume with a spectacular correction. That would cover all the gains you had in that day. So you've been looking at $5 to $10 movement, which is around 5 to 10%, in line with what you see the action of palladium in 2018, as well as in some of the minor metals like cobalt and even nickel 4 years ago when it doubled in a day. So you're going to see that similar action. We're not quite there yet. Like I said, we're in that phase one, actually. You got some physical guys come in. You have the hedge fund that's covering. You have the general that's sort of going to throw in the towel very, very soon, retreating. And you're going to have the physical buyer come in, industrial users. And you're going to have a mom and pop continue to drive the physical market. You're going to have already some of the gold bugs rotating into silver in a very small amount right now, not in a sort of a wholesale sort of all in silver right now. So they're still trying to gauge whether, because they've been hurt so many times in the past with silver, but now there's very indicative signs that gold guys are coming into silver physical. And the silver guys are undeterred of the rising dollar, and deterred of the whacking of the silver. Typically, at 9:30 Hong Kong, at 4:30 at a Hong Kong, sorry, at a London 9:30. Usually the cartels wait for the first half an hour, guys to come in and they'll whack it, right? So now the silver guys are undeterred. I feel pretty confident we're going to have another 10 days of bottom bargaining level to be had around 36, 35. Then early July, I think silver is going to defy the conventional wisdom, timing wisdom of selling May and walk away. And it's going to stage a really nice rally, very similar to what happened in 2021 when silver went from 14 to 28 in the span of 2 weeks. And you're going to see something quite similar. And this time you're going to see silver from 35, maybe a brief stop at 50, and then it's going to go all the way to in the 70s, maybe in the century mark.
Excellent summary. I would be remiss to not touch on some of those geopolitical events you were mentioning. Obviously, a lot of uncertainty these days. We have seen the United States launch a strike against Iran, claiming to take out certain nuclear manufacturing facilities. Iran is saying they barely damaged them. A lot of conflicting reports from Trump saying we destroyed them. It's that they'll never be able to build a nuclear weapon now, to people saying they barely did any damage at all. It was mostly just for optics. But nonetheless, this now technically puts the U.S. in a situation where it can expect for Iran to retaliate, and we could be entering a wider war. Of course, Iran and Israel already launching missiles at each other on a regular basis. I wonder what your overall assessment of this situation is, and how do you think it could affect gold and silver markets? Do you think if this continues to escalate, we could see more safe haven demand being driven into precious metals?
The markets act as this is the market act as if the war will be over sometime soon. The oil has gone up, but it's not to the extent of a forecasting a prolonged conflict. Gold is intact at 3,400, and equity as if there's just a sneeze of what happened in the Middle East. If you wind back for a second, my view is unless Trump does another 180 very soon to say call it a day, you're looking at a precipice of a World War III. Already, more people died in Iran in Ukraine and in Israel and Iran in the first 2 years of this year than the start of Second World War. I don't think it's a surprise that Russia was struck, deep inside Siberia by Ukraine per se, and I'm closer to Siberia than Ukraine is, and all of a sudden you have 200 warplanes bombing Iran, and obviously with the coordination of the U.S. Base in order to fuel their endeavor. It seems to me that that's called the transnationals are already daring an all-out war, not fearing the use of nuclear because they are antagonizing already a staged attack in nuclear-enabled countries. This disabling of nuclear facilities is just a pretense for regime change. I mean, what is to stop the Iran from accepting gifts from nuclear-armed Islam powers or the Chinese or the North Koreans or Iran, who's seeking to stage another proxy in Iran? Because keep in mind that if Iran is conquered through a regime change, the next one will be China. I believe that the tariff is only just a vehicle to drain the Chinese foreign reserve. And the next one is the transnational is going to go after China. They're not just going after the oil in Iran or play monopoly. They have more than enough money at their disposal because they have the printing machine. They just want to complete their dream. It's like, Jesse, you have your lifelong dream, right? It's either to climb the Himalaya or do a world marathon or be a rocket scientist one day, whatever it is. So for the cartel, it is to have world domination. That is their lifelong goal, and that's what they're set out to do. Israel is sacrificing the process. It has achieved its purpose for its 8 years of existence. It already pacified the Middle East region around Mediterranean. I mean, anywhere from Saudi Arabia, Egypt, Lebanon, Syria. And the entire Middle East is pacified. So Israel has served its purpose. And now the roadmap is marching towards the east. And what do you think they're after Afghanistan after all this time of Russia and the U.S.? It is to stage presence on the Western corridor bordering China, which is only about 500 kilometers away. And from there, it would not be inconceivable to have a separatist movement in Tibet or Xinjiang. And then all of a sudden, some bloodshed would necessitate the peacekeepers to step in. And then if Taiwan were to garner a vote from UN, independent vote from UN with approval of tacit approval from US and UN, then you're cornered China completely. And not to mention, lastly, that Saudi Arabia and Iran are two largest oil suppliers of China. So China is being given a very stern notice that geographically, geopolitics, and economically, they are being cornered. So it'd be hard for me to see that the Russians and China would not step in and designate Iran as the next proxy. So what you have, and then Jesse, towards the end, just really quickly, Turkey is being on standby. So obviously, the U.S. supremacy, military supremacy, has been questioned, to say the least, of what's happening in Iran. So in Israel, if U.S. were to stage a ground invasion and with airstrikes, then that's gonna leave Israel very vulnerable for the Turkish to stage a rescue liberation of the Gaza, and then if nobody will know what happens if it does indeed happen. Then you might be looking at a reversal of the Middle East policy, and due to popular uprising that U.S. would be denied all of its airspaces and access. Then you're looking at a complete rebuttal and repudiation of American presence in the Middle East. Hopefully, Trump sees that and call it a day while he's ahead in his advance in Iran, and have everybody come to the table and call it a day. But unfortunately, I doubt that's going to be the case. Unfortunately, Israel it is not the one that's driving the process. Is in the process getting destroyed. My brother-in-law is Jewish, and everybody's dismay of what's happening. Fortunately, I don't think that the country is repairable, and the cartels and the transnationals are going to march forward after Iran. And it's just a provocation for a ground invasion, and after that, they're going to go after Russia and China, and nothing's going to spare them from achieving their objective, nuclear option included. Jesse.
And what about potential safe haven demand into gold and silver? Do you think continued conflict, as negative as it would be for the world, would be positive for gold and silver prices?
Yes and no. My view on gold is a bit more tame, as maybe some of the other analysts calling for $6,000 gold. Majority of the major buyers from Russia, from the well-to-dos, the centi-billionaires, they're already positioned into gold. That's why you saw a non-stop rise from 1,800 to 3,400. It's probably taken $1 trillion or $2 trillion to get to where we are right now. So my view is anybody who want to position gold has already done that. The mom and pop, the retails, their purchase on gold is quite limited. And the way that gold prices are managed is like silver, where the paper market, right, is 50 times greater than the physical market. Like in a given week, there's 1 billion ounces of silver trading nominally on the COMEX, and that's equal to the annual supply of silver. So it's manageable of the sort of the typical buying of gold. I'm not seeing a very strong physical demand and we don't know. Maybe gold is going to hovering around this $3,500 to get to around $4,500 level. But I believe the majority, like the major guys that positioned gold, already did. But silver is a little bit different story. And my view is the transnationals, just call them at that, they already own around 70% of the gold in the world, including some of the gold stored in the central banks. There's talk about Germany and Italy want to repatriate their 5,000 tons of gold from New York. We'll see if that happens, or if there's already been lent out by the cartels to manage the gold paper market and then transfer that gold into their votes in Switzerland. Is yet to be seen. Another interesting observation is historically, if you're a student of the market, typically when you have a when you have a war, geographical conflict like 9/11 or the Iraq war, typically the market would correct around 10%, 5 to 10% for about a week before the rally ensues. However, my view is the transnationals already own around 90% of the S&P. So they own around 50 trillions of the stock market already. And the tariff war earlier this year was almost the last reallocation or redistribution of the equity market from the Japanese, the Chinese, from the Europeans, some of the endowments, international endowments, throwing the towel, and have the cartels and have the transnationals via the printing press already accumulated the last lot. So if you think about a buyer with unlimited purchasing power, only 95% of the market today, there's really not a whole lot of correction that could be had. And that's why you can see that the market was able to be managed so well in both the oil market and the paper market. And I think that maybe potentially the oil market as well, the cartels will have to suppress the oil market to try to achieve to try to stage the spectacular obliteration of and to continue their momentum in the Middle East. So while in all you can have occasional corrections in the market in oil, in gold, and in the equity market, both to the upside and the downside in volatilities, because sometimes you will have some of these volumes that will surpass the calibration of the printing machine, as we saw in February during the tariff corrections. So these machines managing the market, they do have a limit as to how fast they can print. Based on my personal estimation, looking at the futures market and the volume trend, they are printing something about $100 billion to $300 billion on a daily basis to manage the market. They're going all out right now. They are shorting the oil market. They're shorting the gold and silver market. They're lowering the equity market, and in concert with the Japanese and the other in London to have that illusion that everything is all very good. It may be right. Maybe Trump has 180 and say, this is all she wrote. The fat lady sang. They pleased the neocons. The neocons got they wanted, and the everybody got they wanted, and now it's for everybody to come to the table. Maybe a little wishful thinking, but if you start seeing the drumming of regime change on the headlines, then you know that we are still on the early innings of regime change, followed by ground invasion. And then from there, things are not going to stop. They're going to dial up the temperature towards China nonstop, because they know with the internet, with the rising power of Russia, which is stronger than it's ever been. Russia produced more army in 3 months than all of NATO producing a year. And the uprising of China, industrial, militarily, economically, they know that window of opportunity and the awakening of the public, right? They know that window of opportunity is quickly dwindling. So if they're going to go after this is going all the way. It's very, very clear to me. If they dare to struck Siberia and bombing Russian airfields with abandon, and then days later sending jets to Iran, and they didn't even bother to stage, Jesse, any pretense, right? Any rally, any public support, at least give us some meetings in the UN or some congressional discussion. There's none of that. They're going all out, and they're not going to stop at just Iran. They're going to go after reoccupy Afghanistan and stage a direct confrontation with China and Russia.
Yeah, and if there's anything I think we've learned over the past several years, international law is now completely meaningless. Countries can now just do whatever they want. The whole structure that is supposed to hold into place a world legal system that is dictates what countries can and can't do is crumbled. So I think we're in a bit of a dangerous situation in that respect. I do want to pivot to how a silver elephant fits into the picture when it comes to the gold and silver sector. It's been a while since I had you on the show, plenty of new subscribers since then. So maybe start off with an overview of the company.
Yeah, Jesse, we are trading at insatiable value and a very good value of around $15 million market cap, 45 million shares outstanding at around 25 cents. and we still have a very tight structure. We minimized dilution during this last 3 years of downdraft, partly supported by our silver production and our mine project in Pulicayo in Bolivia. So from 2023, when we commissioned the mine to production, I think just right after we talked, we actually generated several $1 million cash flow into the company. And the mine produced 1.5 million ounces of silver in 16 months, in 18 months, from middle of 2023 till early 2025. The company had a setback in early 2025 that a major, sort of the main mining production contract the company has with the Bolivian government was canceled due to illegal mining. So we had a setback. And so since that time, we have set the areas aside that's in dispute and recommissioned a new area neighboring the main concession. So the new area we're putting into production, that's in Silver ELEF, the mining claims is in Silver ELEF's name, is called Perdida. So we spent about almost 9 months in putting that tunnel into production, and we hit high-grade area. The mine is producing on a small scale, and we're just in the midst of right now arranging transportation to a toll mill facility, and also working with one of the two off-takers, of which we're going to sign the contract imminently, and then applying for export license of our end product, which is a silver concentrate, to the export market, so that we can get the production will be exposed to international pricing. The mine will be a mine life at minimum around 6 months, potentially longer. We find additional high-grade materials in the tunnel, and you're looking at over 400 grams silver per ton. That's about double the average of a silver underground mine that your viewers maybe have in other companies. And in the meantime, there has been no evidence of any illegal mining whatsoever. And there's been a tussle in the mining ministry as to the reason of this cancellation, and everybody's a little dumbfounded. I think there's maybe some external influence at work, of which we are working towards restating our contract. Bolivia is going through some tough times. The foreign reserve has been depleted, because there's been lack of new discovery in the oil and gas fields, which account for majority of the foreign reserve revenue in Bolivia, and due to mail investments, due to growing social programs. There is going to be an election in August. I think that when the new both parties, the sitting party and the opposition party, are all touting restart of inviting foreign investments and clean up some of the misdeeds that current government is in place. So we feel pretty comfortable that eventually our contract will be restated. There's no expiration in restating our contract, and while the contract is in dispute, the court has to clear the government from the court is going to prohibit the government from handing out additional contract in the area. So we feel pretty good over time. So you're looking at Silver ELEF right now is really an option play. First of all, we're generating cash flow from production, and secondly, we'll have a very tight share structure. And then if and when we do get our contract restated, then you're looking at over 100 million ounces of silver that would be coming back to Silver ELEF, of which our market cap would be multiple times where we are right now, looking at our peer comparison. Jesse.
Good summary of the company, and I like that you put that issue up front and center regarding that dispute currently ongoing with the Bolivian government. Could you maybe go down that rabbit hole a little bit more, just in terms of the timeline, the efforts you're making to resolve that dispute, and your chances of success in your view?
Hey, Jesse, I want to be clear that we received a letter cancellation citing illegal mining. However, there's no evidence of such, and there's no citing of that. We had an inspection visit, went to the project. There was no evidence of illegal mining whatsoever. So everybody's dumbfounded. The company pay all its dues in royalty to the government, maintains an excellent relationship with the local community. We actually have a very good relationship with the government as well. I mean, I've been in Bolivia for 20 years, and we have a very cordial working relationship with the government. However, there seems to be two factions within the mining ministry, as I said earlier, and there is one part of the government that seems to have instigated a number of issues with a number of mining companies. So Silver ELEF, we're not alone in where we're right now, and the similar resolution is being issued to a number of other mining companies, domestic and foreign, in Bolivia. And I think these bad actors are under influence, and we're still reviewing the cases, and in the end, we believe the truth will prevail. And those factions in August, if Bolivia is really genuine in recruiting or attracting foreign investments, then they have to recognize and what has happened and rectify the courses moving forward. We don't have a timeline. But there's something highly unusual that has taken place, because usually would have been, if there's any issue, the government will reach out to us, the community will reach out to us. So this really caught us by surprise, of which we're continuing to work very cordial with the government and understand the situation. But as we stand right now, there's absolutely there's no evidence of illegal mining at all. And we have all the permits and authorization, in addition to the mining production contract that's being issued to us, to carry out all the exploration and mining activities today. So I would just say that we see actually the mining production contract as a optional upside, given our current market cap of around 15 million.
And let's revert to the news which you released earlier this month. You touched on it, reaching the high-grade silver zone at Pase Apuradita, and you're preparing for first concentrate sales in June. So walk us through the details of that a little bit more, and what it means for the company moving forward.
Right. There are 3 steps there's 3 steps towards realizing production revenue. First of all is to get the materials out of the tunnel, out of the ground, of which we're doing that right now at the rate of around 20-50 tons per day. And we have a stockpile ready for shipment. The second stage is to transport the material, high-grade material, to a toll milling facility to upgrade the materials to a concentrate quality, commercially marketable product to be sold. So that we already visited a number of toll milling facilities, and we're in the midst of finalizing the contract with the toll milling facility. The rate is very nominal. There's not a royalty. There's not a kicker. It's just a straight $30 to $35 per ton of processing. So it's very nominal. And there's well over 100 of these private, various sized toll milling that collects ores from various different private enterprises to produce the concentrate. I mean, Bolivia is the 6th largest silver producer today, over 40 million ounces a year, more than Argentina, south of the border. So that's the second step. And the third step is then to sell that concentrate to an off-taker. You know, the traders, there's Glencore and Trafigura, and there's a number of them. They're all very active in the region, given Bolivia's profile. And so we have also received the term sheet. Depending on, we'll have to work closely with the off-taker and the toll miller, right? Because they are it's an integrated chain. So once those 2 contracts are signed, we're ready for our first shipment immediately to the toll miller, and then so that process will kickstart our production revenue from there on. We don't see any obstacles, and it's about longer. It takes about slightly longer than we anticipated, just to dot the different sort of steps we need to do. Oh, the last but not least is the company requires an export license in order to sell our concentrate to a external party outside of Bolivia, so we can expose our concentrate to market prevailing prices.
Sounds like you've got those plans in place. Let's talk about other upcoming catalysts for the company. What can shareholders of Silver Elephant look forward to over the next year, 3 years, 5 years, reaching out into the future? What's the grand plan?
Yeah, unfortunately, Jesse, our company share price goes a bit yo-yo. We have a great project. We do have a good we do have a good marketing team. We have a good team on the ground. We have recruited a permanent talent, industrial and the mining talent. So the company is really at the bottom of the bottom. We announced Aphrodite production. The stock is up about 25%, but we're still way 20% from the top. And back in 2021, our stock was close to $1. It's over $1 right now. We're trading 25 cents. So in the near term, we're gonna in a very near future, we're going to announce the execution of the offtake agreement and also the toll milling agreement. So therefore, we get our start of our revenue stream from our production, from our operation. And then from there, we're going to continue to work towards restating our mining production contract. That in itself is not really linear in terms of progress, right? It's either you get it back or you don't. And we're just one board meeting away, government board meeting away from getting the contract restated. So we remain upbeat and optimistic, but we cannot really dictate the timing. Wouldn't be surprised this year, and would not be surprised this year. And then third is our company remains debt free. We do have some shares of other companies, Oracle Commodity Holding, for example. That's worth around close to $1 million at today's price. We sold some shares in the market. That would provide additional working capital. We have reduced our headcounts and cut off discretionary spendings. And pleased to come on your show with modest spend just to get the story out. And in the end, riding on silver's coattails and being one of the undervalued companies out there, and the management that's working overtime in aligning our interests with the shareholders. I think you'll be looking at quite a good string of news releases to come, and hopefully with silver, with providing us a bit of momentum and catching a good bid, and foretell higher silver elephant prices to come.
Well, I'll end by opening the floor to you, John. Is there anything we haven't yet touched on? Anything you want to emphasize when it comes to silver elephant or the silver market that you think investors should have their eyes on right now?
Yeah, I would say listen to the market. I think there's a lot of people that have been a perma bear, and every time I show the market, I lose money. And with the transnationals only around 90% of the market already, unlike they could dictate the direction of the market in any given day, as we witnessed in the last few days. There's a lot of geopolitics uncertainties, and Iran is only part of achieving their ultimate objective, which is a total war dominations in taking over Russia and China as well. So you're going to see a lot of geopolitics uncertainties, and that's going to land a good support for gold. And if gold were to stay at the current level, you're going to see an imminent takeout of $50 for silver. I want to preface that, as I mentioned to you, every time silver is taking out $35 in the prior two occasions, in 1980 and 2021, it went up, it doubled in less than 1 month. So I want to caution you don't get too cute. I think trading, a lot of traders were able to profit from a cycle, but we're entering a different phase. This is what I call the buy and hold phase, not the trading range phase. You'd have bought at 30 and sold at 35 and made a lot of money. But right now, if you buy at 33 and sell at 35, you're going to miss the boat. And the first time, 1980, when silver went to 50, it took 33 years to 2013 before silver go to 50 again. And then the next cycle was another 12 years from 2013 to 2025, where we stand today, as silver is going to challenge 50. My trajectory of silver is going to take out 50, and it's going to go within 6 weeks to 75 to 100, and then it's going to engineer that green candlestick, and then it's going to top at around maybe 4,000 gold, and maybe with the calamity of the final chapter in Iran with the final sort of, if there is a solution reached, now maybe a convenient stop for silver. And then from there, you got to get out and find something else to do. If we can exit 20% from the market, and Jesse, feel free to come on your show to talk about what I believe is top of the market. And that will be dictated in hindsight by declining volume and lower highs. So what I mean lower highs is the top is 75, and then you're going to see another rally to 70 or 62. Then you're going to see another rally to 60 to 58 to 57. But you're not going to ever see that sort of, but in the meantime, the mining shares might still rally. The mining shares is got a little bit longer tail. But you want to watch for silver action. When silver makes that top with tremendous volume, you see declining volume and lower highs. You got to just call it a day and go fishing, read a book, take a vacation. There's other interesting metals that we're looking at. Jesse, I will come on your show hopefully in the weeks to come to talk about other interesting opportunities. I've been in the industry for 25 years. I correctly call the bottom in silver. We make quite a bit of money on nickel. We make quite a bit of money on vanadium. Unfortunately, we're not a speculator. We have to ride the up and downs. And it's unfortunate, but I think for speculators, there are other opportunities that are just on the cusp of breaking out and establishing a bull market in the critical mineral space. So there's other opportunities out for silver, but now is as good of a time to getting for silver. I'd rather buy silver right now at 36 than to be buying silver at 34. Your downside is $1 to $2, but your upside is $10 to $20. So you got to buy the physicals. You want to buy some mining shares, and if you do speculate on mining, you want to really spread your basket with as many junior issues and producers as possible. And the issue I want to just briefly touch on, if you look at the Heclas and Coeur d'Alene, they really experienced a number of setback. US based producer because they don't have margin. They're not making money at today's silver price. But then if you look at some of the other area producers in Mexico, they're going through a problem with the empowerment of the local communities, ejidos. So there's a lot of uprising from communities, and Mexican is exerting an anti-mining stance from a federal level. So that's a problem. And then if you look at, if you want to go to juniors, that's a multi-bagger opportunity such as Silver Elephant. You want to make sure they don't carry debt and they have different assets in case they get into some of the hiccups or setbacks that we're experiencing right now. You just want to make sure you'll be able to ride through the thick and thin. So I think you've got to stage all of your eggs in the basket. And I will focus almost exclusive on silver right now. And I think gold has had its run. And the equity market, you have the actors that are looking to support the market with unlimited armor. And then you have the guys that are looking to short the market and they're getting burned. And the oil market is very, very volatile. You don't know when a deal will be struck. So we really don't have any insight to it. So that's my 2 cents. Buy and sell, close the book, and then revisit 6 weeks later.
Well, John, you're a wealth of knowledge when it comes to the silver market, when it comes to the economy in general, geopolitics. That's why I always love chatting with you. I'm going to put a link in the description below to Silver Elephant website as well as social media profile so people can follow along with the company. And thank you so much, John, for coming on again and sharing your knowledge with the audience.
It's my pleasure. Jesse, stay safe out there. It's a crazy world.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.